Why is Russia ditching the US dollar in its oil trade? And what does that mean for your wallet? There's a massive shakeup hitting global trade. Russia is pumping out oil like never before. But now, it's cutting the US dollar out of the picture. For deals with China, Russian oil tankers are sailing into port, priced in yuan, not greenbacks. This isn't just a small switch. It's a bold leap, triggered by trade restrictions, and it's shaking up the way the world buys fuel. For decades, oil sales ran on dollars. That system backed much of America's global influence. Russia leaned heavily on it too, until now. Now, China's currency is taking over a big slice of those deals. US sanctions locked up Russia's money and forced a change. Secret negotiations sealed the shift, and it caught the world off guard. Gas prices in the US are creeping toward $5 a gallon. Job cuts are starting to show. Meanwhile, China's ports are buzzing with Russian crude, and American banks are left out of the loop. From Russia's frozen oil fields to China's refineries, a brand new trade route is emerging, driven by billions in cash. So, why did Russia abandon the dollar? Sure, sanctions played a big part, but the real story runs deeper. Russia's oil fields are churning out millions of barrels a day, and China is buying a massive share. Over half of those oil sales now skip the dollar entirely, replaced by the yuan. That's a huge jump from just a year ago. Russia's crude is priced lower than others, fueling a mega deal with China worth billions. This shift isn't just notable, it's a fundamental change. Russia's oil market once ran on dollar deals. Now, China's currency covers a huge part of that. Pipelines now stretch straight to Chinese ports, dodging dollar-based systems completely. Europe still buys some oil with dollars, but China is now the top buyer, and it's paying in yuan. Why did Russia make the switch? US sanctions made dollar access almost impossible. Meanwhile, the yuan comes with lower fees and fewer restrictions. Russia's banks, now packed with Chinese cash, are driving the shift even further. And China wants more. Demand for extra barrels is growing. Oil towns in Russia are booming with new jobs. And this is about more than just oil. It's a strategic power play. Russia's choice strengthens China's role, while the dollar starts to feel the heat. China, needing mountains of oil daily, has locked in massive Russian shipments, priced in its own currency. This isn't a temporary workaround. It's part of China's push to make the yuan a major global trade player. The system works. Yuan payments slash costs compared to dollars, saving millions annually. China's trade networks now bypass the US financial system entirely. Money moves faster and more smoothly. New contracts mean more oil for China. Meanwhile, Europe's dollar-based oil buys shrink in comparison. China's upgraded ports are handling the rush with ease. This isn't surface level. China's banks, loaded with yuan, support Russia's pipelines and keep deals locked in. Other countries are testing the yuan, but Russia is the anchor. The dollar still leads oil trade, but its grip is slipping. China is building trade dominance, and Russia's oil has given them a massive head start. As Russia prices more oil in yuan, the dollar's role in global trade takes a hit. Billions are now bypassing US banks, which weakens the dollar and hits home hard. Gas prices in the US are nearing $5 per gallon, up from $4 not long ago. As oil gets more expensive to import, the ripple effects spread. Jobs are lost, prices climb, families feel the squeeze. Russia has locked in long-term oil deals with China. Meanwhile, the US still buys oil, but it's pricier. Other suppliers charge more. That puts stress on American refineries and banks. And everyday consumers pay the price. At the pump, in the store, and on utility bills. So, why did Russia's trade path change? Because US sanctions cut off its dollar access. Russia fought back, turning to the yuan for its biggest oil deals. Those moves keep dollars out of the picture and save Russia millions annually. US banking restrictions made dollar deals unworkable. China's currency filled the gap. Europe still buys Russian oil with dollars. But China's yuan deals are bigger and growing fast. This wasn't a fluke. It was a calculated response to US pressure. China's oil contracts snapped up more of Russia's crude while the US scrambled to catch up. Gas at $5 a gallon shows the cost of these trade blocks. They reshaped the game, and Russia ran with it. And China? It's just getting started. Russian oil priced in yuan keeps trade flowing smoothly, but China's ambitions are growing. New ports and trade routes are linking directly to Russia, speeding up deliveries and strengthening economic ties. Payment systems that avoid the dollar are now handling billions. And it's not just oil anymore. Gas, steel, even metals are being sold to China using the yuan. Year by year, Russia depends more on China's currency. US trade with Russia continues, but it's shrinking. Europe buys crude, but China's long-term deals tie up most of the supply. This is no short-term fix. China's cash is financing pipelines that will move oil for decades. Dollars still run most global trade, but China's systems are catching up. Fast. Russia's oil was just the beginning. Now, China's currency is gaining ground in markets worldwide, and Russia's raking in the profits. Millions of barrels a day bring in billions annually. Most of that is now priced in yuan. Add in Chinese financing for new pipelines, and Russia's oil economy is booming. With dollars frozen, the yuan keeps Russia's budget strong, and the savings are massive. UN trades avoid the fees of dollar systems, freeing up money to reinvest. Russia's banks, now heavy with Chinese cash, are funding new oil rigs, creating thousands of jobs and lifting local communities. Europe still buys oil, but China's deals bring in far more, set to last for years. And Russia's fields aren't slowing down. With more investment, production could surge, bringing in even more revenue. China's money also funds infrastructure, roads, towns, and supply lines, building up regions that were once overlooked. This is about more than economics. Oil brings power, and Russia's shift, forced by sanctions, is paying off. Big time. Meanwhile, the US is struggling. Russia's oil deals now avoid US banks. That weakens the dollar and cuts into America's trade profits. Gas at $5 per gallon hits drivers hard. Banks lose deals, cut jobs, and drop millions in payroll. This is a big deal. Dollar-based trade has powered America's economy for decades. Now that dominance is being challenged. Refineries are paying more. Stores raise prices. Heating bills climb. Families across the country are feeling it. Smaller banks are under pressure. Some may not survive. Russia's trade now revolves around China. And the US, left paying higher prices, is looking for alternatives. The dollar still leads much of global trade, but its share is slipping. And every percentage point lost costs billions. Trade blocs forced Russia into China's arms. And now, America's footing the bill. Global trade is getting a new look. Russia's oil, worth billions, is leaning on the yuan. China is grabbing most of it, and the dollar is missing out. China's payment system is growing fast, handling more oil deals than ever before. For Russia, it means more jobs, more oil, and more cash. For China, it means less dependence on other suppliers. But this is risky. Deals can fall apart. Billions are at stake. US restrictions may push gas prices even higher, past $5 and into uncharted territory. Other countries are starting to experiment with the yuan too. Gas, metals, and more, priced in China's money. This isn't just an oil story. It's about China reshaping global cash flow, and the plan is working. UN trades save money. China's banks are fueling trade across the globe. Europe is sticking with dollars for now. But China's deals are starting to tempt others. If more nations follow Russia's lead, the dollar could lose serious ground. Billions in trade could shift, and the impact is already hitting home. Gas at $5? That's just the beginning. China isn't slowing down. And it was Russia's oil that lit the match. So why make such a bold move? because America's trade barriers opened the door, and China sprinted through. Now, the U.S. stands at a crossroads. Its oil fields still pump millions of barrels a day, but new infrastructure takes time. Relaxing trade blocs could help recover some ground, but negotiations are slow. Meanwhile, Russia's oil, tied tightly to China's yuan, keeps flowing strong, and those deals are only growing. Gas prices might hit $6 if nothing changes, costing billions at the pump. New technology could help boost U.S. oil production, but it won't be cheap or quick. Other countries have oil, but again, not cheap. The U.S. can pivot, but it won't be easy. Trade blocs, meant to control Russia, pushed it straight into China's economic grip. And with those pipelines now humming, Russia's not looking back. China's influence keeps expanding. Russia's oil, now priced in yuan, has locked their trade in tight. And that same currency is popping up in more global deals. What started as a sanction-driven switch has become a blueprint for the future, one where the dollar no longer calls all the shots. With that said, thanks for watching, and until next time.